Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're taking a close look at the recent earnings call from Lam Research. We'll be digging into their performance in the March quarter of fiscal year 2025 and what they're seeing for the current June quarter.
Yeah, that's right. The call was back on April 23rd, and it really painted a picture of a company firing on, well, most cylinders. They actually beat the midpoint of their own guidance across the board: revenue, gross margin, operating margin, and EPS for that March quarter.
And what really jumped out, I thought, was the record foundry revenue. That seems pretty significant, doesn't it? Signals real strength at the leading edge.
Absolutely. That's where the most advanced stuff happens. And it wasn't just revenue. Their gross margin hit a high watermark, the best since they merged with Novellus way back when.
Right, and they put that down to investments
Yeah,
in manufacturing and supply chain.
exactly. Strategic moves paying off. And what's more, they actually expect that gross margin to tick up again in the June quarter.
Okay, so things are looking pretty positive. What were the underlying drivers they talked about? What's pushing this performance?
Well, it sounds like the main wafer fab equipment or WFE spending drivers they expected at the start of the year are, pretty much playing out.
Which were? Remind us.
So continued strength in leading edge foundry logic, think the most complex processors. Then these technology-driven conversions happening in NAND flash memory.
Moving to newer production methods.
Yeah, exactly. And then in DRAM, the focus is really on high bandwidth memory and DDR5.
Got it. So the demand picture is pretty much as expected. What about the overall market size?
They're sticking to their forecast for the calendar year 2025 WFE spending.
Sure.
Still seeing it in that $100 billion range.
Even with all the talk about tariffs and the, global economic situation being a bit dynamic.
Apparently, yeah. They acknowledge the environment is complex, but they said so far they haven't really seen any meaningful changes to actual customer investment plans because of it.
Okay. And Lam's strategy within that market, they're not just riding the wave, are they?
No, definitely not. They're explicitly aiming to grow faster than the overall WFE market. Their plan involves, well, basically three things: new products, better services, and this push towards digital transformation.
Right. So how do they plan to actually outperform? What are the mechanics of that?
Okay, so three key drivers they mentioned. First, they expect their potential market, their served addressable market, or SAM, to grow faster than WFE itself.
How does that work?
Well, because chips are getting so much more complex, right? Building them requires more deposition and etch steps, basically adding layers and carving patterns. And that's Lam's specialty. So more complexity means more demand for their kind of tools.
Okay. More intricate chips need more of Lam's specific expertise. Makes sense. What's number two?
Second is market share gains. They sound really confident about their current product lineup, especially targeting these huge technology shifts, billion-dollar-plus inflections, they call them.
Like what specifically?
Things like gate-all-around transistors. That's a fundamental change in transistor design. Backside power distribution, which is a new way to get power into the chip. Advanced packaging.
Stacking chips and connecting them differently.
Exactly. And also dry EUV photoresist processing. That's pretty cutting-edge stuff for lithography. They feel they're really well-positioned in these big transitions.
Okay, leading tech focus. And the third driver.
That's their Customer Support Business Group, or CSBG. The idea is to grow revenue there faster than their installed base of tools grows.
How? By selling more services.
Pretty much through offering upgrades for existing machines, adding more automation, and providing what they call equipment intelligence solutions. It's about getting more value and efficiency out of the equipment customers already have.
Right, so it's a combination of selling new stuff and maximizing the value of the old stuff. Let's get into some specifics on the tech side. What did they highlight?
Okay, so in deposition, atomic layer deposition ALD seems to be doing really well. They specifically mentioned their Striker Spartemp ALD tool.
And what's that used for?
A leading-edge foundry is using it for these low-carbide dielectric films. They act as spacers, basically tiny insulators in really tightly packed parts of the chip. Crucial stuff for preventing interference.
Okay. And you mentioned interconnects earlier. They talked about molybdenum.
Ah, yes, the ALTUS Halo system. This is pretty cool. It enables barrierless ALD of molybdenum. Molybdenum is used for contacts and interconnects, the wiring inside the chip.
Barrierless. What's the advantage there?
By getting rid of a necessary barrier layer used in older methods, they can cut the electrical resistance in those connections by like 50%. That's a huge deal for performance.
Wow, 50% lower resistance. That must really help speed things up.
Exactly. Especially important for advanced 3D NAND memory, which, is key for AI. And they said adoption is really picking up. It's like making the data highways inside the chip much, much wider.
Gotcha. Okay, what about the other side of the coin, etching, removing material?
Yeah, they showcased their new Akara etch system. Sounds like it's quickly becoming a leader in conductor etch. It has this ultra-fast plasma control.
Which gives them better precision.
Precision, yeah, and selectivity, the ability to etch one material without messing up the one next to it. They mentioned getting design wins at top-tier foundries for logic chips and also for multiple critical steps at a big DRAM maker.
So Akara is versatile then, logic and memory.
Seems so. They positioned it as enabling the current roadmaps for both DRAM and logic, but also setting them up for future gains in things like 3D DRAM and these new CFE transistor structures.
Yeah.
It's kind of future-proofing their etch portfolio.
Okay, let's shift back to that customer support group, CSPG. You said upgrades were a big part of it.
Oh yeah, record revenues in upgrades, actually.
Yeah.
A lot of that is driven by NAND conversions, moving from older tech to newer, denser layers. But they're also seeing more DRAM and foundry logic customers opting for upgrades too.
Why? Just to save money instead of buying new tools.
That's part of it, yeah, optimizing their capital spending. But it also highlights a key advantage for Lam. Their tools are designed to be upgradable.
Right, so it's a feature, not just a workaround.
Exactly. It gives customers a path forward without a full rip and replace. They also mentioned working with customers on operating costs, like signing a new multi-year spares deal with a large memory company.
Makes sense. Any highlights from their specialty tech areas? Things beyond the mainstream logic and memory?
A couple of interesting points. They managed to displace a competitor with their 200mm PCVD tools. These are used for making silicon carbide power devices.
For EVs and power grids and stuff.
Right. And they also mentioned their pulsed laser deposition tech is finding more uses in advanced memory. Plus, their Semiverse Solutions platform.
That's the simulation and modeling software.
Yeah, simulation, data science, AI, all that. It helps customers optimize processes and equipment performance. They just signed up 3 large customers for new licenses for Simulator 3D, their virtual fab platform. They stress the cost and performance benefits there for developing new tech.
Okay, so a lot going on technologically. Let's pivot to the hard numbers. How did the March quarter actually shape up financially?
Okay, so revenue came in at $4.72 billion. That was up 8% from the prior quarter. Deferred revenue was flat at $2 billion, so they expect that to start coming down later in 2025.
And the systems revenue breakdown, memory versus foundry versus logic.
Memory is a 43% of systems revenue. That's split into 20% NAND and 23% DRAM. Foundry was the big story at 48%, a new record in dollar terms. And logic and other made up the last 9%.
And the NAND growth that came from.
Mostly non-Chinese customers doing those tech conversions, moving from, say, 1x6 layers up towards 256 layers.
Okay. Geographically, where did the revenue come from?
China was the largest at 31%. Taiwan hit a record level at 24%. And Korea was also strong at 24%.
And the CSPG revenue number?
That was $1.7 billion, down just a tiny bit from the December quarter, but up a solid 21% compared to the year before.
All right, let's talk margins and profit.
Gross margin was 49%. That's up nicely from 47.5% in Q4. Operating expenses were $763 million. R&D is about 70% of that, showing continued investment.
Which led to operating margin of?
32.8%, also up from 30.7% previously.
Tax rate, any surprises there?
Non-GAAP tax rate was 13.3% for March. They actually guided for single digits in the June quarter because they're releasing a tax reserve. Then back to low to mid-teens for the rest of the year.
And capital returns? Debt.
They returned a good chunk to shareholders, $347 million in buybacks, $296 million in dividends. That's about 63% of their free cash flow. They also paid off $500 million in debt, retiring some unsecured notes.
So debt is down. What about earnings per share?
Diluted EPS came in at $1.04. Share count was roughly flat, around 1.29 billion shares.
And the balance sheet basics, cash, debt levels now.
They ended the quarter with $5.5 billion in cash and short-term investments. Total debt is now down to $4.5 billion.
Any operational metrics worth noting, like how quickly they collect cash or turn inventory?
Yeah. Days sales outstanding improved, down to 62 days from 69. Inventory turns also ticked up slightly to 2.2 times from 2.1. Inventory itself is about $4.5 billion.
And spending on their own facilities.
CapEx. Capital expenditures were $288 million, up about $100 million. That included buying land in India, apparently, for expanding their lab capabilities there. Employee count also rose slightly, about 300 people, mostly in factory, field support, and R&D. Around 18,600 total now.
Okay, quite a bit there. So that was the March quarter. What's the guidance for the current June quarter?
They're forecasting revenue around $5 billion, give or take $300 million. So expecting another sequential increase. They specifically see systems revenue going up in both foundry and NAND.
And importantly, they said this isn't just pulling orders forward, right?
Right. They made a point of saying they don't see pull-ins from future quarters contributing to that June number.
Okay, profitability outlook for June, gross margin.
Guiding for 49.5%, plus or minus 1 percentage point. And that number includes their current assessment of any tariff impact.
And operating margin.
Looking for 33.5%, again, plus or minus 1 point, which, they noted, could potentially be a record level going back to the late 90s.
Wow. And that translates to earnings per share of
$1.20, plus or minus 10 cents. That's based on a slightly lower share count of about 1.28 billion. And yeah, that EPS number could also be an all-time record for them.
So overall, a very confident outlook for Q2.
Absolutely. They seem very confident in their ability to keep outperforming the broader WFE market this year and beyond, thanks to their tech and execution.
Let's touch on those tariffs again. It came up in the Q&A. How are they managing that impact?
They basically stressed the flexibility they have built into their global manufacturing and supply chain. They've got operations in the U.S., across Asia, located near their customers.
So they can shift things around if needed.
That's the idea. Optimize the footprint to deliver tools efficiently, wherever they need to go. They said it's part of a long-standing strategy to be close to customers, including in the U.S. While they can't just flip a switch overnight, they can adjust where they manufacture as regional needs grow.
And the current guidance already reflects the known tariff situation.
Yes, they confirmed the June quarter gross margin guidance of 49.5% plus or minus 1 point includes their current assessment of tariff impacts.
What about China specifically? There were some questions about that market.
They did confirm they expect China's share of their revenue to be down this year compared to last year.
Why is that?
Partly because some customers there who weren't previously restricted now are. And apparently those specific customers had plans that were more weighted towards the second half of the year. So losing them makes the year look a bit more first half weighted for Lam and China.
But communication with Chinese customers in general is normal.
Yeah, they said the visibility and communication they have regarding plans from customers in China is pretty similar to what they see in other parts of the world.
Okay, let's double click on that foundry logic strength again. What are the specific technologies driving that record revenue?
It's really those big inflections we touched on earlier. Gate-all-around nodes are ramping up, backside power delivery is becoming more important, advanced packaging keeps growing, things like TSV etch, copper plating for connections, special dielectric deposition.
And the EUV resist processing too?
And dry EUV resist processing, yes. Lam feels they have a leadership position and are expanding their market opportunity in all these areas. That's really fueling the foundry side.
Got it. And back on the CSBG side, you mentioned flattish year-over-year expectations. What's the push and pull there?
Right, it's kind of a mix. They have headwinds in what they call their Reliant business. That's mostly focused on tools for sort of less leading-edge applications, and a lot of that business was going into China, so it's impacted by restrictions.
Okay, so Reliant is down.
But that's being offset by strong tailwinds and upgrades, especially in NAND, as we discussed. Spares are still the biggest piece of CSBG overall, but upgrades are growing fast.
And they're investing in making CSBG smarter.
Yeah, they talked about developing more intelligent services, adding equipment intelligence features, using AI to help customers boost productivity, especially as fabs get built out all over the world. They also clarified, by the way, that Reliant is pretty much all new tools right now, not really refurbishment.
Okay, good clarification. Let's finish up by diving a bit deeper into that NAND upgrade cycle. It sounds like a multi-year opportunity.
It really does. They pointed out that a huge chunk of the industry's NAND production is still on older, like 128-layer technology. So there's a long runway to upgrade those existing fabs to 200-something layers and beyond.
And Lam is well positioned because a lot of that installed base uses their equipment already.
Exactly. They expect to capture a lot of that upgrade spending on their own tools. But they also noted that as you push beyond 200 layers, you start needing more new tools as well, like that Halo system for molybdenum deposition becomes more critical.
So it's upgrades and new tool demand eventually.
Right. The exact pace depends on the market, of course, and the demand for higher quality NAND bits, especially for AI servers and enterprise SSDs. But that $40 billion upgrade opportunity they've mentioned before, They still see that playing out over the next several years.
Alongside new tool sales for even higher layers and maybe completely new fabs, too.
Correct. It's not just upgrades. And there's an interesting dynamic. When fabs have lower utilization, when they're not running full out.
That's actually a good time to do the upgrade.
Precisely. Less disruption to ongoing production. So lower utilization can sometimes actually accelerate the upgrade cycle, counterintuitively.
Huh. Interesting point. So wrapping it all up, Lam seems pretty bullish on their position.
Yeah, I think so. They really hammered home their confidence in their technology, their innovation pipeline, and their customer support enabling semiconductor scaling. The message was clear. Their differentiation helps their customers win.
And the focus is squarely on aligning with those key industry technology roadmaps.
Absolutely.
Yeah.
That's positioned as the core driver for success, both short-term and long-term. And they stressed the continued heavy investment in R&D to capitalize on that growing etch and deposition intensity and keep expanding their addressable markets.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.